I took an extremely high risk with QQQI and I purchased it really early on in the life of the fund, which I don't typically like to do, but I have some good reasoning. QQQI has been performing well, their dividend yield is super high, and Neos is the same company that owns SPYI and manages it, so I do have some hope because SPYI has been phenomenal in our dividend account. So how much in dividends would you get from QQQI if you invested $10,000? We are going to run the calculation, do a quick background check on QQQI, and see if it's actually worth all the hype it's been getting. So if you guys are interested in seeing SPYI, which has a slightly lower dividend yield, check out that video. I will link it below, and let's go ahead and jump straight into it. Starting directly from Neos website for QQQI, we can see that they distribute monthly, which I love. They do have a higher expense ratio of 0.68, that's definitely higher than average, but the distribution yield is 14.28%. Phenomenal. And you guys know that I'm a huge fan of SPYI based off the videos I've done on it, and it's in the 1K dividend account challenge, which is where I invest $1,000 into all these different dividend stocks and track their progress. But honestly, this one took me by surprise by how well it's been performing, and SPYI again was outperforming a lot of the other funds and very, very easily. So the expense ratio, in my opinion, is worth it. But again, that's not financial advice. It's just my opinion. So here's what we're going to look at for QQQI. We can see the ticker, all this, the expense ratio, like we've seen, net assets, shares outstanding, but the important stuff. So this fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing all data-driven call option strategy. Now, I've seen a ton of really popular YouTubers like Dividend Bull actually spoke about QQQI recently, and SPYI, which I think he's a big fan of, and he pulled money out of JEPI because the process that they write these covered calls for SPYI and QQQI, I should just call them the I's, but I guess JEPI is an I as well, but these two funds is better overall. And so let's look at this. Actively managed by Neos, the fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options, blah, 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 kind of some jargon there. But they are subject to a 60-40 tax rate, which is better. So if you're not used to paying taxes, let's say you're younger, you don't really pay taxes on your stock, or you don't follow it, well, you pay a lot of money on short-term gains. And so the beauty of these funds is that you are actually able to pay less in taxes by the way that they manage them. Now, it is really complex. I'm not going to get into all the small details. There's some better videos out on just specifically how they do that. But still, I think this is a crazy opportunity where you can collect almost all of your dividends, which is just phenomenal. Now, the fund also utilizes the call option strategy that may include both sold and purchase NDX index options, which may provide the opportunity for upside capturing in rising equity markets. So that's the beauty of this as well, is you get rising ability. You get this ability to make money when the market goes up as well, which is what JEPI and JEPQ don't have that option for doing, especially like QYLD, XYLD, RYLD. It's not as easy to do that with those funds because of how they're managed. And lastly, one of the most important things, like I said, is their investment objective. The Neos NASDAQ 100 ETF seeks to generate high monthly income in a tax-efficient manner with the potential for equity appreciation. So what you're getting with this is the ability to make money when the market goes up and to make money off of the dividend while at the same time paying less in taxes on those short-term gains. And they may not even be classified as short-term gains. That's, again, how they do this is really, really smart, and it's so efficient for the investors. And that's what I love. SPYI and QQQI both employ this strategy, and it saves us money in the long run. So the company is thinking about people who are investing in their funds. They're not focusing on just themselves making money. They want overall a good fund that people can utilize to do better in, especially markets like this, where we've had a good market the last couple of months, but we are in a tough time in the economy where things are so expensive, and this way you can keep more of your money. So now let's jump into investing $10,000 into QQQI. So using Dividend.com's reinvestment calculator, I love this calculator. We're going to put in 1 year of 10K invested. And this one's pretty easy math. We can see that our return would be $1,423. Our total money would be $11,423. But let's bump this up. Let's say we do 5 years. Now, this is riskier, guys. Of course, it is a newer fund, like I said, and I'm biased because I do own this and SPYI. But it's important to note that this fund could do poorly. We have seen these ETFs come and go. A lot of them have done poorly. I just like NEOS a lot more than I do the other funds, and that's why I would say I'm biased. But 5 years in, and this is if the price just trails sideways. This is just increases, not even increases. This is just the dividend remaining the same, which it could also drop. So year 2, we've gone up. Year 3, year 4. So year 5, by the end of year 5, you are making $2,423 a year just on the dividends. Your total amount of money from your $10,000 invested, your total returns, would be $9,500. So in 5 years, you have almost recouped all of your initial investment, which is out of this world. And your total money is double. You have doubled the total money in 5 years. So let's bump this up again. 10 years. Again, this will be a bit easier math. Let's see. We are going to end the year's return. You have now, after 10 years of owning this, with just $10K invested initially, not reinvested, just invested, you are now making $4,712 a year off of the dividends. Actually, I believe this would be reinvested. That's a mistake. Reinvested, you are now making $5,000 every single year off a $10,000 investment. Insane. But the fund has, again, only been around for less than a year, so it is risky. Your total returns on your $10,000 after 10 years, $28,000, and your total money is $38,000. But again, who's going to take it out after 10 years? Let's jump to 20 and see what this does. 20 years, all the way down to the bottom. Total, oh my gosh. Now every single year from your $10,000 investment, you are making $17,000. Your total money made is $133,000 after 20 years of 10K invested. Total overall money is $143,000. It's just astronomical. And let's just do it 30 years. Let's say you were a crazy investor. You invested 10K at 25 and it's 55 and you want to see what your money has done. Oh man. So now every single year you are making $67,000 off of a $10,000 investment. And I actually know this stuff does work because my grandfather was an investor and he did a lot of real estate investing, and he had initially purchased, I think, about $1,000 into this company. And by the end of his lifetime, it was making him $2,000. I think, more than $2,000. It was making him over $2,000 a month, which is just, or a quarter, not a month, a quarter. So every quarter, my parents would receive a certain percentage of that. And because he wasn't using it, he had enough to live off of, and he was just started divvying up his financial empire to all of us, all my aunts and uncles and my father. So absolutely insane. Your total dividend income for the 30 years is $531,000, and you're left with $541,000 with your 10K initial investment. So that's how much money you can make with this stuff. It is wild to me. And a lot of people don't understand how this compounding works. So again, you're not going to have that 10K. You're going to have to give that up to make all of this money. But after 30 years, a simple investment, and again, I wouldn't recommend doing all this in one stock because it is higher risk. But if you had the money to risk it and you were willing to risk it, your $10,000 after 30 years would net you $541,000, and you could cash that out. Or if it's in a retirement account, you can cash that out, or you can just keep getting the almost $70 grand a month in income. So you would be making more in income than a lot of people make in a year. You'd be making that in a month just from the compounding. But again, there's risks that go into this. It's not as easy as I'm making it sound. There are some complications and taxes, of course, but you put this baby in like a Roth IRA, even a traditional IRA, you put this in a 401k, and boom, you are going to make some serious returns, as we've seen. But there is, again, so much risk. I'm not trying to just scare everybody away. You guys know I love this fund. I am invested in this fund. I bought it within like the first 2 months of it being around. but you have to trade carefully, trade for your own risk tolerance, and diversify. But I hope you guys have enjoyed this video. If you want to see the SPYI video, again, that is down in the description below. Hit the like button, hit the subscribe button. If you stayed till the end, you guys are the best, and I will see you in the next video.